When you're looking for a new home, do you want better interest rates? Well, let's talk about that. Let's figure out how you can get better interest rates. Let me give you a couple of examples. I am Justin Miller with the Chong Miller Group. At the Chong Miller Group, we help people buy and sell real estate here in the Las Vegas Valley. We help people build wealth through real estate. This is the May market update video for Las Vegas. And before I get into the details about the market update, let's give a little discussion and suggestions about how you can actually save money on any specific house that you may want to buy. And that is by paying careful attention to the mortgage interest rate that your lender is providing you. Now, most people, when they're looking for a property, if they're looking for new construction, they just go with the builder's lender, in-house lender. Or if they're looking for a resale property, they go to their own bank. They maybe go on Rocket Mortgage, they find something there. But you can actually shop for your interest rates. So your own bank probably does not give you preferential treatment vis-a-vis the market. It's possible, and you could always talk with them, but it's unlikely it's going to actually be the best choice for you. Instead, you can actually shop for your mortgage loan. Now, what do I mean by that? I mean you can talk to a couple different banks, right? And you can compare the deals that they're able to give you or willing to give you. Now, how do you go through that process? You can talk to your real estate agent. We can give you recommendations for a couple of lenders, a few lenders. You can also do that research on your own, but here's something to really pay attention to. When you apply for a loan, the lender is going to run your credit, and that's going to have a small impact on your credit score. Now, for some people who have very marginally appropriate credit for purchasing a home, they may be really concerned about that hit to their credit score, that maybe 3 points, 5 points of hit might push them below a qualification line. Well, that's important to think about, but here's the more interesting aspect. The scoring algorithms for your credit score actually recognize that shopping for mortgage interest rates can be beneficial, and therefore if you get 3 different credit pulls from mortgage lenders over a 2-week period of time, there's no additional hit to your credit score. You'll be dinged once for the initial inquiry, but the next 2 will have no impact on your credit score. So that's actually a really nice feature of the scoring algorithms, a feature that very few people are actually aware of. Now, if you're right on the edge for what may qualify, may not, you're going to have your credit pulled anyhow by at least one lender. So if you're that concerned about the small hit, talk to me, talk to other real estate agents if you prefer, about things you can do to help boost your credit score by a couple of points in a very, very quick manner. That way, when you get that 3 to 5 point ding on your credit report from that first pull, it's just not going to push you below that qualification line. Okay, so let me give you an example of how this actually works. If you go to your own bank and you talk to them and ask them, hey, do you write mortgages? They'll tell you yes, of course we do. Let me put you in touch with a loan officer here at the bank. That loan officer, you're going to talk to them, they're going to tell you different things, you're going to provide them different information, and they'll be able to write you a pre-approval letter, assuming that you've given them all of the information they need to verify that you're employed and what your income is, and they run your credit report so they see what your debts are. They can calculate your debt to income ratio, and they'll see your actual credit score. And then based on that, which can all be done within a few hours, they'll give you a pre-approval letter. Okay, so that's the running of your credit. Now, you probably are not going to have your credit run again, even if you get into contract, officially open a loan application and go through the process. They're going to use the initial credit pull the lender did, when they took your application for the pre-approval. Right. So now let's say that your lender comes back and you're looking to buy a median priced home, which is $475,000 in Las Vegas at the end of April. And you're taking out a 90% loan to value loan. So you're putting down 10%, $47,500, or that's your plan. And that means you're going to be borrowing $427,500. Okay. Now, if what your bank comes back and tells you, oh, we'd be happy to do this, we cannot lock your rate yet because you're not in contract to purchase a home, but we can tell you the current interest rate would be 7.1% for you. Now, that results in, right, you can do the calculation, you get the lender to do the calculation for you, that would result in a monthly payment just for principal and interest, not including anything else, not including PMI because you're doing less than 20% down, not including HOA fees or utilities or property insurance or taxes, but principal and interest only. That results in a monthly payment of $2,872. Right now, this is just an example. It doesn't mean this is what's going to happen to you, even if you're buying the median priced home, right? Because your criteria are going to appear differently for various reasons. But that's a particular number. Now, what if you actually took a recommendation from your real estate agent, from me, for example, and you went and you looked at 2 other lenders and you got 2 other quotes, and one of those comes back, it's 6.8%. So instead of 7.1, it's 6.8%. That's a 30 basis point lower interest rate, right? 0.3% lower interest rate. So not a huge difference, but a meaningful difference, and a difference that you will absolutely find when you're searching for rates. You may actually be able to save up to a whole 100 basis points, a whole 1%. Now, the exact same house, the exact same 10% down, the exact same loan to value on the mortgage, that mortgage is going to come out to be $2,767 per month. Again, principal and interest only. So just by doing a little bit of work, talking to 3 banks and getting these different quotes, that's $105 per month savings. That's not by looking for a less expensive home. That's not by putting more down payment into the purchase. That's simply by talking to a couple of lenders and getting competitive quotes, right? When banks are competing for you, as opposed to knowing, oh, you're the only choice, right? They will talk about interest rates, and you may well be able to get a better interest rate than you would from your own particular bank, right? So this is really key, right? $100, $105 a month, that's a nice savings, right? That's money that goes back into your pocket to do whatever you want, right? Improve the yard, or pay down a credit card, or go out to eat for a meal, whatever, right? It's better that you have it than your lender. And again, there's no second hit on your credit score by talking to that second and talking to that third lender. Because if you do it within 2 weeks, the credit scoring algorithm says it's all one inquiry. It's one inquiry about one particular type of purchase. Okay, so really important. Now, I want to talk about one other thing with interest rates real quickly, and that is developer buy downs. If you're going and looking at new construction properties, one of the ways in which developers, builders are trying to get people through the door currently, have been for the past couple of years, is by talking about buy downs, that they will buy down the interest rate on your mortgage for 1 year or for 2 years or for 3 years, right? Depending on the particular developer or the particular community, right? They may do a 1, 2, 3 buy down. So they buy down the interest rate a whole lot in the first year, a little bit less in the second year, a little less in the third year. And then the mortgage goes to the actual mortgage interest rate for the remainder of the 30 years on the life of that loan. Now, here's what I want to talk to you about. They can sound really enticing, right? And maybe you can save several $100s for the first 12 months of that loan. But then the pricing on that loan is going higher, right? And you're saving less and maybe nothing after the end of the first year or end of the second or end of the third year. That means that your monthly carry costs are going to be going up on that purchase, right? And so if you start thinking about that teaser rate at the beginning, this is very much, it's not identical, but it's very much the same as the idea under an adjustable rate mortgage. Your rate is actually adjusting. Now, it's not going to continue to adjust every year going forward after these buy downs have taken effect. It may become a fixed rate loan. So years 4 through 30 may all be at a fixed rate. That's great, but you've got to get, from where you are in the first year to the final setting of what that interest rate is at the end of that buy down period. You could be quite shocked, right? If you were getting this amazing teaser rate because a builder gave you this amazing deal, come the end of the first year, it's like, oh my God, I've got to pay a lot more for this house than I realized. Now it's all disclosed. They tell you up front, but you're super excited about the money you're saving at the very beginning of time, that you may not be paying attention to it. I want you to pay attention to it. And by the way, it's possible for you to take your own money or a closing cost contribution from a seller of a resale home and talk to your bank and have that applied to buy down your mortgage rate. And you could buy it down for the life of the loan, or you could buy it down just for the first year or the first 2 years if you wanted to, right? So you could get that same kind of buy down in a resale environment that the builders are advertising that you could get by working with them. And by the way, if you're going to work with a builder, make sure that you also hire a real estate agent. The builders are going to pay your real estate agent, and your real estate agent is going to represent you. If you talk to a builder and the builder says, we don't work with real estate agents, or if you go in and talk to a builder who says, we will, but you didn't bring your agent with you the first time you visited, you're going out there naked. You have no representation. There may be friendly people in the sales office. They don't work for you. They work for the builder. And if things go wrong, they're not your friend. They work for the builder to protect the builder. So you want to be careful about it. They're very friendly. Oftentimes, we've got friends who actually work for builders in the sales offices, but they have a particular job that they do. And their job is to act as a fiduciary for the builder, for their employer. It is not to represent you. Even if you think they're representing you, they are absolutely not. By law, they are not. They are working for the builder to advance the builder's interests. You want your own representation. Okay, now let's go ahead and start with the market update. The market update for May, which means that I'm looking at data from April. First thing I'm going to look at real quickly is interest rates, because interest rates have been incredibly volatile over this past month, right? Since a little before the president's announcement of Liberation Day on April 2nd. And by the way, here we are just barely more than a month into the period post-Liberation Day. Are you feeling more liberated? Kind of interestingly, today is the day, as I record this, on the 9th of May. Today is the day that the administration announced their very first grand final trade deal, and that's with the UK. And the White House just announced, well, the overall plan is X, but the details will actually be worked out over the next several weeks. So there's not actually a trade deal yet, 1 whole month in after Liberation Day, with any country that has any kind of details sitting around it. So kind of interesting. We're going to see more tariff issues. We're going to see higher prices for lumber, higher prices for aluminum, higher prices for labor, higher prices for all the things that go into new construction, which is going to cause new construction to slow down further, which is going to cause further upward pricing on the resale market. So mortgage interest rates have actually been fluctuating throughout the month of April, around 6.85 to 6.9, right? They've been going down a little further, 6.79. They've been going up a little further to 6.99, but they've been fluctuating in around a very narrow band, rapidly, dramatically, but around this very narrow band, about 6.85 to 6.9. This is what they've been doing actually for multiple months of 2025. This is down very slightly from the fluctuating around 7.0% that we had seen through most of 2024. Okay, so interest rates on the one hand, they're extremely volatile. They may be resetting at your banks 3 times, 4 times a day. They may be all over the place on a weekly map. But if you look across a little bit of time, like 2 weeks, 3 weeks, a month, we actually see interest rates are quite stable. Where are they going directionally? I don't know. The Fed just disclosed its results of its May Federal Open Market Committee meeting. The Fed did not change interest rates, and by the way, I'm not a defender of the Fed. I think that the Fed was performing very poorly over the past few years, but at this time, the Fed is very concerned about increasing inflation, primarily due to tariffs, as well as potentially increasing unemployment. The high level of uncertainty in the environment is causing the Fed to hang tight, hold pat on interest rates, and I think that's actually the best decision they can make. So interest rates are probably going to continue in this sort of narrow band just below 7% for the foreseeable future. If inflation actually does start picking up, which is likely, after the end of May, we're probably going to see interest rates going up a little bit. Now, I will say, because interest rates are resetting at banks multiple times a day, you want to be making sure you're talking with your loan officer, at multiple banks, to get competitive interest rates, and B, to make sure they're giving you good advice about what time of day you might want to lock in order to get maybe the slightly lower instead of the slightly higher rate. And remember, you cannot lock a rate until you actually are in contract to purchase a property, because that purchase contract is a necessary requirement for any lender to give you a rate lock. Okay, unfortunately, that means that while you're shopping for a home, you're a little bit blind about exactly what your interest payments or your interest charge is going to look like on your loan. So if you've got a really knowledgeable real estate agent as well, somebody who knows a lot about the financial industry, you might want to rely a little bit on your real estate agent as well to give you some advice of, hey, today interest rates are probably going to go a little higher, hold off on your rate lock for 2 days, or this is, we're really probably scraping right at the bottom of where we're going to be able to get within the next couple of weeks, so you should lock your rate today. Real estate agent who's really knowledgeable about the environment can be valuable with regard to that insight for you. Okay, so now let's move on to the data specifically around real estate transactions. And the first data we look at every month is pricing. And remember, in this new format, I'm looking at single family. I'm also looking separately, but in the same video, at condos, and I'm also looking separately at townhomes. Now, there's one other note I want to make, and that is I segregate out anything that's not a resale property. In the multiple listing service, some developers will put some of their properties, new construction, into the MLS. They do that for advertising purposes or marketing purposes, or perhaps to try to convince appraisers about the value of some of the properties that they're building, right? They've got specific motivations as to why they put the properties into the MLS. Unfortunately, they're in the MLS. And even though the Las Vegas Realtors, who owns the MLS here in Las Vegas, understands that this is in the data set, they don't report out discreetly what's actually a resale and what's actually a developer new construction listing. Now, very few new construction properties ever get listed in the MLS. Only some do. Why do the others not? Who knows? It could be a lot of different reasons. Why are these the particular ones who do? Don't know. Could be a lot of different reasons. In the resale market, we know individual sellers have little market power. They've got an individual house. maybe 2 or 3 that they're trying to sell, and that's it. A developer, they may have hundreds of houses, and they're picking particular ones that they want to put into the MLS. So they're a different category of product. And so when you read in the newspaper what the LVR puts out in the data set that this is happening with pricing, it's not necessarily very accurate. If you read in the paper or you listen on the news what's going on with pricing, they're using what's actually in the field of statistics referred to as dirty data. It's corrupted with data from multiple different populations. It's dirty, and therefore it's giving you inaccurate and inconsistent information. So that's what you're learning when you talk to other sources or you're viewing other sources. I always segregate out that new construction, and I'm looking only at resale. And I'm going to show you what the difference of that is here. Okay, resale single-family homes in the Las Vegas Valley in April. Median sold price, $475,000. Now, that happens to be flat. That's what it was in March as well. Okay, so that's flat from March. It's up 2.7% year over year. So from April 2024 to April 2025, prices at the median went up by 2.7%. All right, that's the cleaned data. That's the resale data only. Well, what if we include new construction homes that happen to have made it into the MLS? Well, then median sold price was $480,000. And so you may think to yourself, well, it's a $5,000 difference. What difference does that make? Well, it makes a significant difference in your ability to understand what's actually going on in the market. And if you're a seller, in your ability to understand your competition in the market, because your competition is almost definitely other resellers. Partly because that's the majority of the market, but partly because people who are not looking for new construction, they're looking at resales. And that's probably who's buying the resale properties, including yours. Okay. Now, there's something else here though. $480,000 median if we include new construction. That's down 1% from what we saw in March. So that's kind of interesting, right? The market, the resale pricing was actually $475 and it was flat. And by including the new construction properties, we get not only the wrong number of 480,000, we get distracted by, oh, prices are going down. Prices are not going down. Prices were flat in the resale market. Now, why would prices appear to be going down if we include new construction data? Well, let's look actually at just the new construction data that's sold in April of 2025 that's included in the MLS. Median sold price, $529,990. That's a lot more than $475. Right? That's $54,990 more. Right? That's more than 10% higher than the median price for resale properties that sold in April of 2025, right? So that's a really different price profile. Well, that new construction data, those new construction houses that were listed in the MLS and sold in April, they weren't just $529,990. They were also down 7.8% from March. So why did the total aggregate go down by 1%? Because the new construction data went down by 7.8%. In other words, if you were looking for a new construction home, there were some builders who were either changing the mix of what they were including in the MLS or negotiating on some of those properties that they've been including in the MLS. Now, it's hard to take that limited number of new construction that are in the MLS and actually make claims about things like new construction pricing is going down. We don't know that, right? We don't know that at all because it's such a limited set of new construction data that makes it into the MLS. All we know is the new construction data that did make it into the MLS came down in price by 7.8% from the prior month. And so when we include that dirty data, that other population, in the analysis of what's actually taking place in pricing in the resale market, we're being really misled by things that actually are more than 10% higher in price in April about things that are taking place in the market. The resale market in Las Vegas, median 475,000, flat with March. So 475 March, 475 April. That's why I control for the type of product that's getting into the analyses that I'm doing. It's why I segregate out the new construction properties. They should not be included in our analyses. All right, so that gives you a really good understanding of why it's important to understand what the data are, and only when you understand what the data are can you start to make claims about what the data are actually saying to us. So when you're getting dirty data, which is what LVR puts out, and you're not segregating out the alternative populations that are making it into there, then the claims are all false. They're all wrong. So anyhow, a note about data. Condos, what happened in the condo space? Condos, $247,000, that's up $12,000 from March through April. So that's up quite a bit. That's up 5.1%, right? That's a really strong gain. But remember, the condo market's been fluctuating a lot, and we had come down for a couple months in a row. Year over year, condo prices are actually down 0.5%. So not very much, basically flat, right? So single family homes up 2.7% year over year. It's up, but it's pretty flat month over month. Condos, big gain in April vis-a-vis March, but just slightly under flat year over year. Townhomes, 348,000. That's up $3,100 or 0.9%, just less than 1%, 0.9% month over month. It's also up the same 0.9% year over year, right? So townhome prices up slightly, less than 1% month over month, and again, basically year over year. So that means so far in 2025, if we're looking back 12 months, the market's been pretty flat. So you may recall in 2024, we actually saw some decent price gains in the early part of the year. And so we were up in the early part of the year over 2023 by 7-8% in most of the market segments. And then we started giving back, and we ended the year up about 5% in 2024 vis-a-vis 2023, right? And so we're holding those prices that we saw at the end of 2024. We're going up, but we're not going up very much. We're going up at slow rates so far this year. And I attribute that to the uncertainty in the environment. There's been massive uncertainty, including what Liberation Day would be, what the implications of massive trade barriers would be, trade tariffs would be, what the impacts on inflation will be, what the impacts of trying to shut down Social Security may be, and et cetera, et cetera. Huge levels of uncertainty in the environment. And we're going to see that in more in just a second. But market insight, and so this actually folds into that comment. Market insight, looking at price per foot. Remember, price per foot gives us some indications of what's going on in the internals of pricing, because the median sale price, that's just the middle. We'd like to know something more about what's going on above the middle price and below the middle price. The price per foot helps to illuminate some of that. And price per foot in April actually went up $4 or 1.5% month over month, right? We were flat, and this is single family. We were flat on single family median sold price, but we're up 1.4% on price per foot. Now, 1.4% may not seem like a lot, but if we annualize that, right, we take that and say that we go up by that same amount every month of a year, that's 16 plus percent, that we would be going up. That would be an incredibly strong year of price appreciation, right? So that's actually a pretty big monthly gain to go up the 1.5%. So that means that we actually saw price per foot diverging from median sold price, and that price per foot on the median at the median on sold properties suggests actually it's the higher end of the market that started doing better. And we saw this in March as well. And this is a change from what we've been seeing through most of 2023 and most of 2024. And we now have 2 months in a row. We'll see if this continues to give us an actual trend with the May data when it comes out at the beginning of June. But this suggests that the upper end of the housing market is being less negatively impacted by the uncertainty that's taking place. It could be that people at the upper end of the home purchase market are actually less concerned about what's taking place with regard to all of these issues that are driving uncertainty in the larger market. And so I think that that's actually probably what we're starting to see here. It'll be interesting to see if that continues. Okay, so that's pricing. That's what's going on with pricing. And that's really important, really important to know for you as a buyer or you as a seller, what's taking place with pricing. But what's taking place with regard to demand measures and supply measures? Well, let's look first at demand, like I always do. And we do that by looking at actual sold contracts, right? So these are houses, single family, and then we'll look at condos and we'll look at townhomes that actually closed during the month of April. And this is kind of interesting information this month. So single family closings, 1,994. That's up in April vis-a-vis March. It's up by 56 houses or 2.9% month over month. That's not a strong gain in sales. And if we think about April as being sort of the peak of the spring selling season, a gain of 56 houses in a 2.4 million population area, a gain of 2.9%, it's kind of a weak showing. Now, we are down 5.5% from last year for sales that took place in April. And I just want to comment really quickly. You'll remember 2023 was incredibly low sales volume at the end of the year. In 2024, we beat that by, I forget exactly what the number was, but approximately 2.1% from 2023. Nationally, 2024 was even weaker than 2023, but these were two incredibly weak years. Well, in April of 2025, we're 5.5% lower transaction volume than we saw last year. So at least through April, through the first 4 months of 2025, we're at really weak transaction volume. I don't think that's changing, okay? I think we're going to see that continuing forward. And again, that's related to the uncertainty issues, right? Interest rates have not gone higher, and prices are just marginally higher than what they were last year at this time. So it's not because of interest rates or pricing that we're seeing this level of sales really weak. It's because we've got something else taking place in the environment, and that's uncertainty. Now, sales are taking place, right? And I've suggested before, these are the need to buyers. I need to buy something. Doing business with the need to sellers. We'll talk more about the supply side in a couple minutes, but let's look at condos and let's look at townhomes. Condo sales in April were down, not by a lot, but they were down by 12 or 4.6%. Remember, the condo market is much smaller. It's about 13% the size of the single family home market. So down by 12 or 4.6% from what we had seen in March. Again, April should be right, the spring selling season where we've got sales should be increasing every single month. January, well, after January, February, March, April, May, June. April's the middle, the strongest part of the spring selling season. We're down 4.6%. And by the way, we're down 32.3% from what we saw last year, where last year was just barely more than the weakest we have seen in a generation. That's condos. All right, what about townhomes? Maybe they're doing great. Well, 244. That's down 5 townhomes or 2.0%. Remember, the townhome market is even smaller than the condo market, about half the size of the condo market. Down 5 units at 244, down 2.0% month over month. Now, we are up strongly from what we saw with townhomes last year. That's great. But these numbers in the aggregate are so small. They don't move the needle for us in the overall housing market, but we're up 21.3% on townhomes year over year in April. So that's what's going on with demand. Demand is, I'll say, tepid, right? There's little that's pulling buyers into the market with urgency. Buyers are not out there responding to things like, well, prices are going down and that's great, so I'm going to jump in. Or interest rates are going down and that's even better, and so I'm going to jump in. Or I know what's going on with the future because it's really clear, and they're going to jump in, right? Buyers are clearly really concerned, and so the people who need to buy, they're buying. But that's it. That's what's taking place in this market right now. Now, pending insight. This would be pending contracts, right? Looking forward, what's likely to close in May because something went into contract in April but had not yet closed. We're up for single family and for townhomes. We're further down for condos. And even in single family and townhomes, the pending contract numbers have grown by significantly less than what we would expect as seasonal numbers. Okay, so we're just not seeing demand picking up here. Now, one other type of sale that may take place, and therefore a demand measure as well, and I've repeated this for the past whatever number of months, and that is foreclosure sales, right? So is there a lot of demand out there for foreclosure sales? Well, there may be, but there's no supply. And so that means there's no satisfied demand. So the number of closed sales, foreclosure, single family, in April, 0. In townhomes, 0. In condos, 0. Which means for the first 4 months of 2025, there have been no foreclosure sales on any type of property in the Las Vegas Valley. So that's that, right? That's not helping any part of the market. It's not there, and it's not coming back. It's not going to be there. It may come back in years, multiple years from now, right? We could go through a cycle where there's significant foreclosure sales. It's not in the foreseeable time horizon, okay? All right, so let's go ahead and look at supply, right? We looked at demand. Demand's pretty tepid, right? It's not growing. Condos down, townhomes down, single family homes up by next to nothing, by 2.9% or 56 units. Supply, we look at this by looking at inventory. Okay, now there's been a lot of press about really dramatically increasing inventory. Lots of sellers are moving back into the market. They're listing lots of things for sale. And I've been trying to show you that that's not what the numbers are actually indicating over the past several months, right? We're not seeing the surge of sellers. Now, I want to give you the actual details, the actual data. And I want to tell you, yes, of course, in the spring, we always get some more sellers coming in for a variety of reasons, including seasonally, supply should be growing a whole lot in the spring. Is that what's actually taking place? Is the news about this issue actually correct? Well, single family resale homes listed for sale, or not newly listed, but in inventory, in the month of April, 6,162. Now it's up 185 or 3.1%. So it's not actually a very big gain, but it is a gain. We're up a lot year over year. We're up 40.7% for single family homes listed for sale. Okay. But I do want to comment. We have fewer houses listed for sale in April being listed for sale, right? Now it's sitting in inventory, not newly listed, but sitting in inventory. In April, in the height of the spring selling season, than we had in September or October or November last year. Right? So these are not really big numbers. These are not indicative of a flood of new inventory. These are numbers that are showing, okay, there's some inventory sitting out there. In fact, in the single family home space, that number would work out to a little bit less than 60% of what we would be expecting. So that's a fraction of what we would be expecting to be in inventory. It's not a big number, okay? Well, we'll look more at this in a second, but first, condos. Condo inventory is also up. It's up 21 to 1,409. It's up by 1.4%. Very small gain in inventory for, again, the strongest part of the spring selling season. We're up a whole lot from what we were last year, up 37.9%. Townhomes. Well, in townhomes, it's even worse. 949 townhomes sitting in inventory. That's down 17 from March. It's down 1.8% month over month. Okay. Again, we're up really strongly year over year. We're up 86.1%. But that just means our numbers last year sitting inventory were devastatingly small. It doesn't mean that we've got big inventory by any stretch of the imagination. Now, new listings, right? This is kind of an insight because new listings are things that kind of came into inventory in April, and we expect, increased inventory going forward in time. Only single family residential saw an increase in new listings in April. It was up a decent but not strong, not seasonally appropriate 6.1% in April. Condos and townhomes, new listings in both those segments fell, which means our inventory numbers are going to be weaker in May for condos and townhomes. So let's look at some more details on the inventory to give us some more understanding about what's actually existing on the supply side of the market. And I've been doing this for the past several months, right? Looking at the divergence between what's for sale and what's being bought. So the median sold price told us what's being bought, right? The median list price is the middle of what's actually listed in inventory. Well, so what's listed in inventory? Well, we know it's 6,162 single family homes. And I'm looking specifically at single family residential for this particular data. Well, the median list price on those 6,162 houses, resale only, not infected with new construction. This is resale only. $575,000. It's literally $100,000 higher than the median sold price. So what buyers are looking at, $100,000 less than what's sitting there in inventory at the median, right? Doesn't mean everything in inventory is mispriced by $100,000. Some things may be mispriced on the low end, but in the aggregate, at the median, $100,000 higher at $575 for median list relative to $475 for median sold. That's a gap of about 22%, right? That's a huge miss. That's a huge miss. So then we think about, well, how can we actually understand what does this mean with regard to inventory? Well, we can normalize the listings by changing their prices in the data set such that they correspond to the median sold price. And if we do that, we actually have an effective inventory not of 6,162. We have an effective inventory of 2,960. That's just barely 25% of what should be normal inventory at this period of at this time of year. Right, way under 30%. This is just over 25%. So it's 26 to 27% of normal inventory. Is inventory growing? Well, fake inventory is growing, right? Illusory inventory that most people actually don't see when they're searching for a home, but inventory that in the world is not going to sell because it's so mispriced, right? Really, if somebody came to you, if you were selling a house, and somebody came to you and said, "Yeah, I love your house. I'm going to offer you 22% less than what you're listed at." What's your reaction going to be, right? If you were way overpriced and they offered you 22% less, it may be the right market price, but you're still going to look at them derisively and say, "No, go away. I'm not going to even talk to you," right? So these are not real sellers who are really interested in trying to sell their property because they're just out of their mind. On the other hand, if you're a buyer and you're looking for properties to buy, and to give you an idea of just how small inventory is right now and how badly priced some things are in inventory right now. I was just doing some research yesterday evening for a client who's looking to buy in Cadence, and they're looking to buy a certain type of property, single story with a pool and whatever other details. And I found that there were 3 listed. Right? We were trying to figure out what the comp would be for one of them that they were interested potentially in putting in an offer. And we'd seen that one, and we'd seen one of the others. We didn't bother seeing the third one, right? Which was too small for them. That was it, right? Cadence, that's a pretty big master plan community. That's what's listed that fit their criteria. 3 houses. Right? And then I decided, well, let's go ahead and comp them. Let's look at what's sold that are comparable over the past half year, over the past 6 months. There were 3 sold, and there was 1 in contract, right? And looking at those was hard to actually figure out good numbers. So I started expanding the criteria, looking at what might be available if I eliminate the pool, for example. If I reduce the bedroom count that was required, for example, right? And so looking at the listings, well, I found a couple of additional listings. One of them with no pool was not over $900,000, right? Which put it hundreds of thousands of dollars too high relative to other stuff that was in the market. So there you have a perfect example of a seller and a listing agent who are out of their mind. They're so mispriced that if you are actually a buyer and you're typing in your criteria, you'll never even see it. You won't even know that it's for sale. It's not sitting there with the match on the criteria. Give me this price range on this number of bedrooms with this size car garage and this maybe a pool or whatever. It won't come up in your search because it's so far out, right? So buyers aren't even seeing it. So it's fake inventory. And a buyer who happened to run across it because maybe there's a yard in the sign and they call, it's like they greet the seller with something. Something not great, right? Not going to help the seller. The seller's not going to sell it. The buyer's not going to buy it. right? So yeah, we do have some more inventory, but it's still less than we saw in September and October and November of 2024. So it's not really big inventory. It's less than 60% of normal inventory for this time of year. But when we renormalize that inventory around appropriate list pricing, meaning something that looks about like sold price, we actually have 2,960, just over 25% of normal inventory. So all these headlines out there about sellers are flooding into the market, that there's lots of inventory, that this is going to push prices down. I will say this, there's some guy who's been out there, and I'll mention his name, Gurley, I think it's Nick Gurley. And I ran across him during the pandemic, so a few years ago. And he had this amazing data set, right? Now it's national in scope. And I was watching some of his videos describing what this data was. And it was really interesting because he's got this, he's, I guess, paying for it, really great data. And he's got some interesting analytical tools that will graph out what some of that data is. And I was thinking to myself at that time, I really wish I had this data. It would be really interesting to play with and to look at. Well, I don't know exactly what he does with the data, but he comes out with these amazing claims, right? He has a preconceived negative notion of what the market is, and he misanalyzes all of this data. And I don't mean to be putting him down, but he just does. All of his conclusions about the stuff in the data are all wrong. It's possible to have data that's bad, and that leads you astray. It's possible to have data that's good, and the data that's good could lead to good analyses, or it could lead to bad analyses if you don't know what you're doing with it. So for example, one of the claims he's making is, and this is made repeatedly now in the press and including by LVR, is that prices are coming down. So what's going on actually in the real world, in the real data? Prices from March to April were flat. They were not coming down, they were flat. They were going up in the condo market, they were going up in the townhome space, and they were flat in the single family space, okay? But at the same time, depending on how you're looking at the data, inventory that's mispriced by $100,000, those sellers could be cutting their prices and cutting their prices and cutting their prices. They could be chopping 20% off of their prices. Their prices are 22, 23% too high. If they chopped their prices by 20%, they would still be a little bit high, right? Not terrible, but a little bit high. So you could make a claim that prices, list prices, are coming down, that they're coming down dramatically, and maybe they're still too high, right? But you can't say that with regard to what's actually happening in the market, because in the market, you have to look at the transactions that are taking place, not what some person decides that they're just going to randomly pick a number and then they're going to randomly change the number again later. The actual transactions, those prices are not coming down, right? The appropriate way to analyze the data is prices are flat to slightly higher. They're not coming down. And when somebody is out there saying, prices are falling, sellers are having to chop their price multiple times before they get into contract. So it may be true, but they're priced completely wrong. So that claim is kind of worthless. So the better way to understand, if you're a seller and you're thinking about selling, talk to some agents who can actually tell you what the proper price should be for your property, and listen to them and have them explain to you why it's the appropriate price. And if you're talking to an agent who just says to you, well, if that's what you want to list out, that's fine, I'll do it, because they're just trying to get their sign in your yard. They're trying to get their count of listings up, but they're not actually going to help you sell your property if you're priced obscenely relative to actually what's taking place in the market. So if you list your house for sale, Either, right? Either you just want to tell people you've got a really expensive home that you live in, and that describes some people, or you're actually wanting to sell your home. Well, if your objective is just to be able to tell people, oh yeah, I live in a $3 million home, I live in a $5 million home. Oh, you guys are pokers, mine's a $10 million home. Okay, well, great, you can do that. But if you're actually wanting to sell, get some professional help in figuring out what the market actually is, right? Reach out to the Chong Miller Group. There are others who can help you as well. We're not the only knowledgeable, capable real estate agents that there are in the Las Vegas Valley, but we're really good at what we do. And when we price things appropriately because we want our clients, our seller clients, to be able to sell their properties to move on to the next thing that they actually want to do. Same thing on the buy side, right? We're not going to tell a buyer, oh, you only want to pay $5 a month? You want to buy something that's $100,000? Sure, no problem. Let's go look at all the inventory. By the way, there's one single family home that's listed for under $200,000 in the entirety of the Las Vegas metropolitan statistical area. And that's the same one that's been listed for the past several months, right? Amazing deal. Hasn't sold yet. So, you have to understand the market, and there are professional representatives, real estate agents out there to help you. And some of those professional representatives either are lazy or they have no idea what's going on. They don't want to be the ones who give you the bad information because it's not what you want to hear. Some real estate agents know what they're doing. They know what the market is. Chong Miller Group, we're in that category. Okay, one other thing I wanted to give you, one statistic I want to give you, which I do every month, and that is back on market. Single family resale, there were 687 contracts that failed in April. That's 25%, 25.6% of all contracts that had been written that failed. So that's a really high, really elevated number. It's actually better than we've seen on single family homes in about 4 years, but it's really high, right? That number should be well below 10%. So we're 2.5 times 10%, and it should be below that. Condos, 128, that's 32.9% of transactions failed. That means contracts written, buyer and seller both investing in the thinking that they're moving forward and they're actually going to close, and there's going to be moving, right? Buyers moving in, sellers moving out. Hopefully not in that order. Sellers moving out first, buyers moving in after, right? 32.9% of those failed. And townhomes, 102 failed, that's 29.5%. Now, townhomes last month, that number had come down kind of nicely. It was still way elevated. It's like 27%, but we're moving back up, right? We're moving up again on condos. We're moving up again on townhomes. Single family homes, we saw movement down, but I doubt that's going to be a substantial or sustained trend. I suspect it's just a monthly fluctuation in the randomness of the data. Really bad. You don't want to be involved with failed contracts. You want an agent who can talk to you about the issue, explain what's going on causing these failures, and how the agent helps protect their clients from the potential of contract failures, whether you're a buyer or a seller. Really important. Okay, so that's it for the market update for April of 2025. I am Justin Miller, principal and co-founder of the Chong Miller Group. Again, at the Chong Miller Group, we help people buy and sell homes. We help people build wealth through real estate. If you'd like to have really great professional representation, please reach out. I'd love to be able to talk with you and figure out if we can actually help you, whether you're a buyer or a seller. And if you find these videos useful, please share them with your friends, your neighbors, your colleagues, your family members. You can smash the like button, you can leave comments, you can hit the notification bell, you can do all those things. We'll respond to you. But this is really important stuff, right? So like at the example I gave at the beginning of the video, you could be saving, just by talking to a couple of banks, you could be saving $100, $200, $300 a month on the payment on the identical home purchased at the identical amount. Right? These insights have real value to people who want to be participants in the real estate market. And by the way, if you're a seller, that's important information to be able to provide a buyer who's thinking, I'd love to buy that house, but I'm not sure I can make the payments, right? There's ways that you can actually help your buyers afford your property without like slashing the price on your home. Right? Assuming you're priced appropriately, and the buyer will find you because you're priced, somewhere around market value. So, all right, real good. I'll see you in the next video. Thank you.